All right, all right, all right. This is Let's Talk Credit. We are back again one more time with Let's Talk Credit. We're going beyond credit. And it's been a while since we've had an opportunity to actually speak with everyone or share with you all. And the reason being is because we've been working on going beyond credit. And so we've mastered credit. We understand how credit works. There's many videos that you can watch about the credit program, and we had our financial workshop where we walked through the different processes of financing. But it was more than just talking about it, it's about implementing it. And so what I wanted to do tonight is bring you one of our testimonies, right, from our beloved sister Celia Daniels, and or Daniel. And I'm so glad to have you here. How are you doing this beautiful evening?
I am doing fantastic.
Okay,
Fantastic.
wonderful. Wonderful, wonderful. Now, I'm so glad to have you here, see what you've been doing. You've been doing outstanding. So I first met you doing a presentation for in St. Louis, which I was invited to by Rofa Malka. Many of you know her as Perdita, but she invited me to do that presentation. I met yourself, I met Hillary, and I met some other wonderful people while I was there doing that presentation. And you took it very seriously. And I was talking about credit and understanding credit repair, right? And that's what first intrigued you into coming into the process of actually creating generational wealth, as well as setting up your retirement properly, correct?
Absolutely.
All right, great. And so
Absolutely.
what I wanted to basically do from there is I want to ask you a few questions just so the audience can understand how powerful what it is that we have in our hands is, okay? And so the first thing I want to ask you is after we did the credit repair, we understand credit repair, everybody wants to do that, and that's something that I advise everyone to make sure that their credit is up to par, not so you can spend credit, but so you can lower your interest rates and use credit as a powerhouse tool. But once you do that, we have to get beyond credit. And so I invited you to a presentation that I believe at that time Frank Kimbrough was doing the presentation, correct?
Correct.
And so you were able to get more information and you decided to go with the full beyond credit program. And so what did you hear in that presentation that intrigued you and made you want to utilize or move forward beyond credit?
Well, first of all, I heard a lot of things that I wanted to do.
Okay.
One is to turbocharge my retirement because I started late after going through life circumstances.
Okay, so
And
so for one, turbocharge your retirement, correct?
absolutely.
Okay, go ahead. Second.
The second thing is, although my credit is not bad, I've been actively working on my credit.
Mm-hmm.
But when I saw the whole picture that it has like a one-stop shop, in other words, it does a lot of the work for me that I really don't have time to do right now for myself.
Mm-hmm.
That intrigued me, that I can
Gotcha.
just provide the information
Mm-hmm.
and then the experts do all of the work for me. So,
So
mhm,
go ahead. So the next thing that you saw was that you actually would have a team of financial advisors
mhm.
advising you on the proper ways to be able to invest your money so that you never lose money. So you would have no risk, high yield returns, correct?
Absolutely.
Okay, go ahead.
Absolutely.
Mm-hmm.
Absolutely. The other thing that intrigued me is that even though my credit score was fairly decent, I want to improve it even more. I didn't think that it was possible to potentially have an 800 score.
Mm-hmm.
Uh, However, I'm giving them my information. They send me a letter. I mail it to the credit bureaus, and they are responding pretty quickly. So I haven't seen the results, but I'm seeing the work that's being done on my behalf. That's exciting.
Absolutely. And with this company, what I like about it is they use a system that's extremely powerful. And so I've seen systems that have gotten people to 700s and 800s, but this system is so powerful because the way and the system that they use. And with this company, the credit repair is added as a free extra bonus. but the experts behind writing the letters, the types of letters, what you're sending at the time frame at which you're sending it, allows for a lot of people to end up with 800 and 830 credit scores more abundantly than I've seen with any other company or any other financial advisors that I've ever dealt with. Okay, so that's extremely powerful as well. You're right. So go ahead.
The other thing that really excited me as an having a multiple businesses, extra stream of income, which you can't do it just working for one person.
Mm-hmm.
And I understand that concept, but I didn't have the tools that I needed to really accomplish that goal.
Mm-hmm.
And so the Herla app, which I'm taking advantage of whenever I'm working on my other businesses, including MWR, when I'm doing prospects.
Mm-hmm.
I literally, having downloaded this app right now, I have a potential of $1,099 of potential deductions just
Absolutely.
by keying in just one, two or three different informations: where I'm going, who I'm going to see, the
Mm-hmm.
mileage, and it does the rest.
And just
That
being myself using that app for just 6 months, I'm over. I think I'm at around $3,000, if not more. I probably more because that was 3,000 probably about 2 months ago. So I'm probably at about $4,000 or $5,000 now, and just in write-offs, right? With traveling and all the different things that I do, I'm at about 5,000, probably about 5,000, $4,000 to $5,000 worth of write-offs myself. And you've only been in this company a couple months and utilizing
yes,
that app, and you have been able to get up to almost 2,000, so, or 1,100, right? So
yes.
we're looking at, we're right, and these are write-offs that by the end of the year you're going to be able to write off, and that's extremely important as well, because when you understand write-offs and how you use your business as a tax shield, right, and properly be able to do that, you just by doing that alone, utilizing that app, you've automatically cut that. You move from the bracket of 28 to 37% to 18 to 22% when it comes to taxes. So you benefited from that already, just utilizing that app, and it does all the work for you automatically, which is
All the
really
work.
powerful. And that's the thing that we like. See, most people, I mean, this is something that's key, is that most people, what they end up doing is everybody's like, well, I'm going to do this myself. Yeah. If you could do it yourself, everybody could do it themselves. But the problem is most people won't.
Mm-mm.
And so my thing is delegation. If I can get a group of financial advisors that are going to work on my behalf while I'm making money, they're making my money make money.
Come
I'm
on now.
definitely going to use the automation. I'm definitely going to use those advisors. I'm definitely going to let them do what they do at their highest level skill set, so that I
Mm.
can do what I do at my highest level skill set, and you do at your highest level skill set, and you're making money hands over fist while you're doing what it is that you normally do. That is the power of this, and I'm so glad that you're taking advantage of that. Go ahead.
I'm taking advantage of everything that's being
I
offered.
already know. I already know. Go ahead.
A little bit at a time. And as the old saying goes, nothing happens overnight instantaneously, but I am seeing the potential residual effects of just utilizing, I think, four things: the raise credit score increase.
Yep.
I'm seeing that potential. I've experienced the reducing of my taxes, where I'm getting an instant pay raise with I submitted another form since I have my business right off now. I was able to submit another W-4 form. So I'll be getting an additional increase of taxes or money coming back to me. So I'm
Outstanding.
really looking forward to that.
I'm super excited.
I've already taken advantage of one of the probably the diversified cash flow account or the private
That's
reserve
excellent.
account.
That's
I'm
excellent.
just
That's
waiting for
that's
some of
right
those
there. Now you
information.
just
Yes.
now I want to just break this down for the audience so you can be clear. So they can be clear. So what happened is, and I want people to understand this, because When we go beyond credit, now we're in the long-term game. And this is not about getting rich quick. What we're talking about is retirement and leaving generational wealth in the manner that the wealthy do. This is very important right here where you're hitting at. So what happened is you were talking about the Hurdler app, right? You were
Yes.
talking about, which is going to give you a tax shield. And as you said, now you're going to get more money back on your taxes at the end
Yes.
of the year. Then you also put in a W-4 at your regular job as well, which we're going to talk about in a minute because I want people to understand the reality of this. And then you also were you also talked about the credit repair. So that was increase. What increase means is the financial advisors are going to go in and see where and what areas they can find money for you. Okay. They're going to go in and find ways to find money that's already there and what you're already making without changing anything in your lifestyle and what you're already doing. So if you're already working a job, that doesn't mean you have to start a business. The financial advisor is going to go in and find out where you're working this job, where you're doing something wrong, where they can get more money out of it. And then what you're going to do with that money is the next stage of what you talked about, which was the diversified cash flow and PRA account, right? Those accounts are no risk, high yield, untaxable insurance accounts, just like the bank has. The bank has insurance accounts. They take your money and put them in insurance accounts that they use. It's called the FDIC. That's an insurance account. Instead, we skip the middleman and put it in our own insurance accounts. But these are the proper insurance accounts. These are the insurance accounts that billionaires use. But we're able to use them because we have so many working together as a pool that we're able to get the same bang for with a small amount of money that billionaires have to get by investing at least a minimum of $500,000. We get that same return untaxable. And so now you're able to take that money and now put it into those accounts. Is that correct?
I can't wait. I can't wait. That's still pending, but yes.
You're right around
I'm,
the corner from it.
I'm
Good,
right
good.
around. Yes.
So you're right there. So now, but I want them to understand. Now you had an IRA, right?
I was losing money on one of my IRAs.
On the IRA, right? And then
On the IRA, yes.
you have a 401k as
I
well,
have a
correct?
401k. I have several.
Several.
Uh,
Good.
yes.
All right.
As
Because
soon
we're gonna talk about this right now. This is gonna be very important. And then you have a Roth IRA as well, correct?
I do. Mhm.
Okay, so let's look at the IRA. So you said you were losing money on the IRA. Do you mind sharing that with the audience so they can now take advantage of understanding how unsafe their retirement accounts are?
Yeah, one of the accounts, I have several, but one of the accounts that I have, I've literally was investing $50 a month.
Mm-hmm.
When I looked at it, and I really didn't really start looking at it until I
Go ahead.
became a member of MWR.
Mm-hmm.
And I decided to look closely at what was going on. I have literally been paying $50 a month for an account that has not accrued more than 200 and some dollars in
Mm.
that particular account.
And let's look at the indicators on why that took place. Okay. So here's why. Because the stock market, your account is attached to the stock market. Now I'm going
Right.
to ask the people on the line. Do you think, according to this economy and all that you've been hearing about it, because everybody now has been following the reset and the different ideas, whether you believe that the economy is going to stand or if it's going to totally bust, however you look at the economy at this time, one thing that everybody is certain of, all economists are talking about, there's going to be a major recession, but more than likely it's going to be a depression. So if we look at that and we look at retirement accounts, this isn't like the old school retirement accounts. These accounts they've attached to what are called stock or mutual funds, which are a group of stocks, right?
Correct.
So that means when the stock goes up, your money goes up. When the stock goes down, your retirement account goes down. That is highly volatile. I don't care if the economy is doing good. Everyone knows the stock market is never a safe place to put your money. Period.
Right.
So your retirement is based, most people's retirement rather, yours is no longer based there, but most people's retirement is based in a volatile, high risk, low return, right? High risk. Now pay attention to this. High risk is supposed to give you high returns, right?
That's right.
But they're in a high risk, with low return, right?
Yes.
Tax deferred, meaning you're going to pay taxes on it when taxes get higher at a later date, because taxes never go down. They always go up for the most part, 99.9% of the time. So you're going to defer your tax payment until they go up.
Correct.
So you're in a high risk, low return, tax deferred to a later date when taxes will be higher investment instrument called your retirement account. That's why you only have $200 in there after you've been investing for how long in the IRA?
With this one for almost 2 years on this
almost 2 years
on one of them. Yes.
So that would be 52 times 2. That would be 104. That would be 100. No, you do it weekly. No, weekly. Is it weekly?
That's 24 times 50. So that's $1,200 that I could have invested in something that was yielding. So
that would be $1,200 that you could have invested somewhere else that's supposed to be growing with compound interest, correct?
Yes, sir. Yes,
but it decompounded the opposite direction.
Absolutely.
So you just threw. So actually, you just threw away $1,000 that you could have done something else with.
Yes, sir.
But most people never check that. Therefore, there's many people that are stuck in that situation, correct?
Absolutely.
And that was one of the smaller accounts. There's people putting in 300. Yes. There's people in there putting $300, $1,000, $1,500 a month or more into their IRAs every 30 days and losing all of their money and have no idea that they've lost their retirement before they even retire. That's why they tell you when you retire, you end up with 40% of what you could barely live off of at 100%.
Right.
So this is key, right? And so I want everybody to really get the concept, really understand where we're at. So now you move from the IRA. You kept the Roth IRA, and the only reason you kept the Roth IRA at this juncture is one, it's not tax deferred. The Roth IRA is untaxable once you move into a retirement. So it's a non-taxable instrument, the Roth IRA. That's good. We want you to keep that right now. Why? Not because it's better than the PRA or the diversified cash flow, which eventually you will move that money into some instrument like that. But at this juncture, while you're working, your company, if I'm not mistaken, is matching what you're putting in it. Is that correct?
They historically used to match it. Okay. But they only do a percentage now.
Okay.
So in my case, they're only contributing about 20% of what I'm investing.
We need to look at that again. We need to look at that again then.
Uh-huh.
Because it might be wise to take that and start putting that in the diversified or PRAs, because they might give you a higher return, which would be wiser to do. And then you're going to get a higher yield with no risk.
Listen, soon as MWR say, I am,
your accounts
they have approved. As the old saying goes, a peacock happy. I'm going to be so peacock happy to transfer all of that into that account. I can't wait. I'm looking forward to that. In addition to the term insurance, I'm paying $101 a month And I can't wait
There
to
you go.
invest that in something that I'm going to yield
That's right.
18-20%.
Yeah. Yeah, we're gonna get you. You're gonna be good to go. So let's move. Let's move. So that's the multiply. And this is the objective. Your objective is to get into our multiply system where the financial advisors are now your money is making money for you. So you've already done some of the increasing. Now, at your first now, as this is what I want everyone to get. This is a step-by-step process. So the first step is finding where you have money. I want to talk about another area that you found and utilized inside the increase portion where they go in and look for more money. And that area is the debt elimination. How is that working for you?
Ha! I tell you, I'm so excited. I have a, I've been given a debt-free date of June of 2027. So in 4 years,
Outstanding.
I will have eliminated all of my debt. This is also including not only my car note, but my student loans.
Outstanding. So your student loans, your car note, and did you have a mortgage?
No, I didn't have a more. I did, but
Didn't.
I had liquidated my property before I found out about MWR.
That's all right, though. That's all
Dadgummit.
right. That's all right. That's good because you don't have that debt. So, how
No.
many years were you in debt before the debt elimination system was put in place?
Oh, I was expecting to be debt free about 15 years
So,
with some of
15.
my.
So, it took
Mhm,
15 years down to 4 years as
mhm,
far as debt is concerned. And I've
mhm.
seen 30 people with 30-year mortgages get it cut down to 7 years that everything will be paid off, all their debt will be paid off. And I've seen people take 30 years and pay it off in 5 years utilizing their system.
Yes, I can't wait.
So that's extremely powerful, right? So now you're going to be debt free. So all
Mhm.
that extra money that you would have been spending out in interest, and I know that interest, how much interest did they save you? Were you able to see
26.91% interest is what I'm being is going to be saved.
26 point what nine?
91%.
Did you have a dollar amount? Did they give you a dollar amount with that or no?
You know what? I don't.
They gave it to you, but you just
They
don't.
probably did. I just didn't haven't looked at it
Don't worry about
recently.
it, but that's still so
Mhm,
if you're going to save 26.91% in interest and you
mhm,
understand how they compound interest
mhm.
because nothing is going toward the principal. And so
Nope.
you're paying that just the interest until you're paying extra payments on the principal. But they've taught you how to be able to pay that principal with what you already have coming in. And that's extreme. It's so powerful the way this system works to get you your money back so that now you can invest and have it working for you. Right
Yes.
now,
Yes.
what else have okay? So I want to move forward. I want to go to one, I want to go backward because
Mhm.
the first thing that you did was you did the instant pay raise. So
Right.
when you did your first instant pay raise with just your job that you had, right? The
Mhm.
one job that you had, you ended up getting how much back per what was it, paycheck pay period?
Yeah, it averaged up to like only like $9 or something.
Okay, so that was
Yeah.
$9 per pay
Mhm.
period, right?
Mhm.
Which was
Mhm.
every week or every 2 weeks?
Every 2 weeks.
Every
Mhm.
2 weeks. So what was that? What's that? 20
Uh,
six
it was
26 weeks. I mean, that would
yeah,
have been 26 times 9 is what you would have
right.
made on that, right?
Right. So that's about $234. But
So $234 for the year. So
mhm.
that is $234 that year that you would have got back. But
Mhm.
that's why I wanted the people to understand this isn't about getting quick money. What this instant pay raise is about is to see, do you have extra money that we can now drop into the PRA account or the diversified cash flow account that's going to give you no risk, high yield returns that are non-taxable when you put them
Yeah.
in and when you pull it out, right? This is what we're building towards so that every single month now your interest is making you money, right?
Right.
So now you're living off interest instead of living off your money. Now you can put your money into an account that's non-touchable at all. The other thing about the diversified and the PRA accounts is the IRA or the IRA and the 401ks, they go up when the stock market goes up. They come down when the stock market comes down. The PRA and diversified account go up when the stock market go up, and then they stay there when the stock market goes down. Then when it goes up higher, they go up, but they stay there when the stock market goes down.
That's
So
exciting.
you can only win. This is why the wealthy are wealthy, because
Right.
the Rockefellers, the Gates, the Buffetts, these are the type of accounts that they utilize. Okay. So that's extreme. So basically, so the PRA accounts, they go up and continue to climb. Now, the other thing is, so what we want to do is, so she didn't get any money out of the what was that, the instant pay raise, correct?
Right.
At first.
Right.
So what the financial advisor do, what we moved to was what? Boom. Moving to look at eliminating debt. So now you've eliminated the debt. Then now we know where we're going to pull some money from there, a nice amount of money. The Hurdler app. Now you got $1,100 within a couple months, a few months, and by the end of the year, that's going to be probably about 10 to 15,000, right? That you built up. It's going to be write-offs that you're going to be able to take that money that you would be paying in taxes to utilize to put in the PRA, diversified cash flow. Plus, you're going to have a return because I want you to tell the story about, you said you went a second time and did a W-4, and now you're getting a return on that. Explain that, if you would, please.
Yeah, now I haven't seen the actual manifestation of the actual calculations, but the potential is instead of $9, 60 something dollars. So per paycheck, yeah.
So now we're multiplying that times what, 26?
Yeah, so
what
that's
number do we have there?
It's 67 times 2 times 26. So we're talking about $3,484 a year.
So that's a $3,500. We already know you're probably going to have about another 10 to 15,000 from the Hurdler app, right? And that's on return. So you're getting that money immediately, another $3,500 by the end of the year. So you're already at about almost 20,000 extra dollars that the company has found in what it was that you were already doing. You haven't changed your lifestyle. You didn't do something different. All you did was utilize or let the financial advisors go in and walk you through the process of what you're supposed to do, and they already found that extra money.
Correct.
For you. Correct?
Correct.
Now,
yeah,
which is beautiful, right?
Right.
That's exactly what we're talking about doing. Okay. Now, what about lower your bills? Have you done that yet?
I have. I've only submitted a couple of bills. And I think what I uploaded was wrong, so I have to redo it again. But I'm anticipating on utilizing that. Right now, I can't tell you what they're going to come up with, but we'll see soon what that's going to bring.
And we'll do another interview again once you've done that. Like I said, this is a long-term process, but you're doing it rather quickly in the last 2 or 3 months. So, but the process is a long-term process because you're going to end up leaving generational wealth for your family, for your children, for your loved ones. This is so powerful. And, my attorney was talking about he saw something where he was talking about the difference between the Rockefellers, right, and the Vanderbilts. The Rockefellers followed this process, the multiply process. They went from the increase, and then they did the multiply. They were borrowing from themselves through the PRA accounts, the diversified cash flow account. Borrowing from themselves. That's how he built his banks and businesses, with the PRA and the diversified cash flow insurance account. Then what he did was he wrapped it in the proper 3-tier trust in the proper jurisdiction. The Vanderbilts didn't. The Vanderbilts lost all of their money. The Rockefellers to this day have generational wealth following the exact system that we're following today. So that's why I want people to understand the power of this. right? Because you can now take the money that you already have, and now the accounts that were only available to the wealthy, you have an opportunity to utilize those accounts with small monies that will then become big monies because they're no risk, high yield, non-taxable accounts that are going to give you the compound interest and residual. Not only that, you still continue to get the residuals or the percent, the interest. You still get the interest payments even when you borrow or take the money out of the account. So for instance, if I have a savings account and I utilize the money in my savings account, I don't get any interest on that while I'm utilizing that money. So I lose time on it. And when I put the money back in, then I'm only still getting a low yield, right? 1%, if that today.
Right. Right.
With these accounts, you're looking anywhere from 5 to 30% return, right?
Come
With
on now.
no risk, right? Exactly. With no risk at all. And when I take the money out, or if I borrow my money from myself, which the Rockefellers did, that's how they built the things that they built. The wealthy, this is what they do, right? And I'm gonna use Rockefeller because he's on record for saying this. When I take the money out, I'm still getting paid that interest while I'm using the money.
Come
So
on.
it's not a secret. The wealthy aren't wealthy because they're smarter than you in the sense of being smarter. They just have access to things that the average person doesn't.
Right.
Right. And that's where this is the key thing. And so we were trained to reject, not just to miss this. Very important to get this concept. We weren't just trained to miss this, we were trained to reject this.
Yes. Yes.
That's even deeper. And if you
Yes.
understand that the Rockefellers created the school system, and his
That
key
was so
thing was,
powerful.
I don't want competition. These were the two rules. He doesn't want any competition. And the purpose of school was to create employees. That is key. So you weren't just taught what to think and how to be an employee. You were taught to reject that which would help you to win. It's very important to get that concept. Extremely important. So we went to the $9. You got the $9. Now that became 60, right? We've taken that to the next level. Thanks to the business of taking on the business side and adding the tax shield. And,
Yes.
and now you got the write-offs, right? Because we don't use the business. You can use it to make money if you want, but we utilize it as a tax shield, and so that we can get more money off the taxes and get our refunds quicker, right? And then you started messing with the lower my bills, but you want to play with that, because I know people that play with that, we usually end up with $500, $1,000 that we save. I've seen people save $500 on average monthly on their bills just utilizing that service. So that's extremely powerful as well. You utilize the debt. They were able to find money in the debt elimination side for you, right?
Correct.
And you're increasing your credit, right? Okay, so
Correct. Working on that too.
you got that. Those are in process. Good. And then you've
As a matter
already
of fact,
started. Oh, you've already. Oh, go ahead. Go ahead.
as a matter of fact, I actually just received a report from Empyrean. And so I scanned that. And, the nice thing about it is they give me a letter to send to them, and then they respond. The credit union responds, and then I just take that information, scan it, and send it to them to review and see what else they're going to do with it.
Yeah, that's
Yeah.
beautiful. That's
Yeah.
beautiful. So now the next thing is, did you have you started working on your trust? Have you dealt with that at all?
Not yet.
Okay, no, that's okay, because that's time. That'll be the next
Yeah.
phase of development. I just wanted to know, had you done that yet? Because we're gonna wrap. You want to wrap everything into the trust, the proper trust, the 3-tier in the proper jurisdiction. And if you don't know about that, just contact us. We can get you the information on the trust. It's very important. Most people's trusts are in the wrong jurisdiction. As a matter of fact, we have people that have actually gotten trust and they're upset now because they recognize after dealing with our system
And
that
paying a
their
lot of money.
trusts were totally wrong. They're I've seen people have to go to probate that had trusts, even though because they were in the wrong jurisdiction. And
I
so,
can't wait.
yeah, if you have a trust, you definitely need to get with us so you can get a proper trust that will be what we call bulletproof, or actually the financial advisors call it bulletproof. It's a
Yeah.
bulletproof trust. And that's going to be extremely important. So, is there anything else that you want to add before we close out?
No, only thing that I'm excited about all of the opportunities that this company has actually presented to me. The most important thing is it's easy to share with people what it's doing to help, and it's educating me. I thought I knew a little something, but I'm learning that I didn't know as much as I thought. And if nothing else, the educational component of what MWR has done for me has been second to none. I'm really, really excited. And my desire, my prayer is to be able to share with others what it's not only doing for me, but what it potentially would do for others. That's my ultimate goal. Is just to
Absolutely.
share.
Absolutely. And let me say this real quick is that that's exactly what happened to me, because I don't care if you make a little bit of money or a lot of money.
Mhm.
If you have IRAs or 401ks and you're looking at retirement, or if you're looking at setting up generational wealth for your children.
Mhm.
See, I've been blessed to be in every single category. I've been an employee, I've been a business owner, I've been a business system owner, and I've been an investor. I've made millions of dollars. I've done that. I've already done that. But why do you always end up back at square one? The reason being is because the multiply component is missing. The
Yep.
instruments that are necessary in order for you not to become rich. Rich is easy to become. It's easy to make money. Creating money is not hard. Everybody can do that. That's not a hard task. You can go get a job and create money. You can hustle
Right.
on the street and create money. You can do whatever you do to create a lot of money. That's not the hard task. The hard task is keeping the money. Why? Because the only instruments, the things that you've been given that are in the forefront, unless you know where to go to get the proper information, the instruments that you have been given are designed to make you broke again. An IRA is designed to make you broke again. A 401k is designed to make you broke again. They're designed to do that. So you find what? Those that have retired back where? At
Back at work.
Walmart greeting you,
Yep.
right?
Back at work.
You find them at Walmart greeting you because those instruments are designed to do that. The instruments that we have been privy to are designed to make you wealthy. That's why we didn't know it, even though I made a lot of money. In the room with me, when I first really learned about this, in the room with me were millionaires and financial advisors from Merrill Lynch, attorneys, right? And $1 million investors. I want you to be clear. All of us in that room said we had never heard this before. If the investors at Merrill Lynch that are working with people that are doing $1 million or more had never heard of this before, I want you to understand. They all joined right then.
Yeah.
If they had never heard of this before, I want you to be clear. Then the average financial advisor that you're going to go see has no idea about what we're talking about. So I'm advising you to, work with us, come look at it, and get in touch with me, get in touch with Celia, and let's get excited about this thing. Let's leave some generational wealth for our children. right? Because
Absolutely.
according to Proverbs, a good man leaves an inheritance for his children and his children's children, and a good
Amen.
woman does the same. So, with that, I appreciate everybody's time. Thank you so much, Celia. It was a blessing having you here. We're looking forward to meeting with you again. And congratulations. And thank you for letting me help you and being there for so we can all be blessed.
Come
And I
on
look
now.
forward to helping your family with generational wealth.
I
And
have to say one thing, if you
go
allow
ahead.
me.
I don't have a problem.
I literally had my nephews
Hmm.
sit, more my 14-year-old nephew. He was taking notes. I had him listen to. I said, "Come over here. We gonna inundate you now. We're gonna brainwash you
That's
now."
beautiful. They pay me. You have to realize the wealthy pay millions of dollars to teach their 12-year-old children what we're talking about today. So that's how far behind. I found this out when I was 50 years old.
Come on.
Right? You understand what I'm saying? I was 50 when I learned about this. So I
Yeah,
want
I'm
you to
60.
exactly. They're learning it at 12.
Come on now.
So that's why I always say, do you think Oprah? Do you
Come
think
on.
Jay-Z? Do you think Warren Buffett? Do you think Rockefeller? Do you think they're having the same conversation with their children that you're
Absolutely.
having with yours? Absolutely not. It's a total different conversation, and you are now privy to that information. So
Yeah.
you're right. Great job. Outstanding. At 1% of the cost, right?
Yes.
Yeah.
Worth the investment.
Worth the investment. All right. So with that, we go ahead and close out. I appreciate you.
Appreciate you, my brother.
See you all at the
All
top.
right.
Peace.
Absolutely.
All right, everyone. Welcome to another Let's Talk Credit. Looking forward to it. And we're going beyond credit again. We've met before with our beloved Celia, Daniel. And now we had an excellent opportunity to end up in Las Vegas. Las Vegas was beautiful. I really enjoyed it. Had a great time with you and everyone else. And we really enjoyed ourselves. And so hopefully next time you all get to join us again. We will be in Atlanta coming up in the 11th month. I will give you all the dates, the times that you all can be there with us. If you're in Atlanta, come see me, come see us. This is real, and we're changing and adding to people's wealth. What we offer is generational wealth, leaving wealth to your next 10 generations. And let me ask you a key question before we get started. How would you like to retire your children before they're born? Right? So that's what we're going to be talking about in Atlanta. We're watching people being able to have retirement fund within 2 to 3 years versus having to work 50 years. We are watching people who had would not have had a retirement and now have a retirement, and we're learning how to leave generational wealth to our children's 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 children, and happening in real time. And we're watching this happen before our eyes, as well as now we're learning the secrets on how to retire our children before they are born. And so if any of this touches you, I advise you to meet us in Atlanta. You can text me, you can hit me on Facebook, Instagram, YouTube, or you can feel free to text me at 312-767-3740 to get more information on that. And so we can get started working with you to help you be able to retire your children before they're born, leave generational wealth, and have a retirement that where you don't have to go back and get another job at McDonald's or Walmart. You can actually retire for real. And so with that, no further ado, we're bringing forth our beloved sister Celia Daniel for an update from our last conversation. And so Celia, welcome. How are you doing this beautiful evening?
I am fantastic. If it could get any better, I don't know. I'll be tickled pink. Tickle pink, tickle pink.
Outstanding, outstanding. That's wonderful. And so you had an opportunity to go to Las Vegas with me, right?
Yes, yes.
And so how did you enjoy yourself there?
It was phenomenal just to see so many people whose lives have been impacted by MWR
Hmm.
and who are excelling in this industry and making a difference. Not only are they making a ridiculous amount of money, but they are impacting positively others' lives. And so I was really, really blessed to see and witness so many people who are just kicking butt and taking names, as the old saying says.
I got you. I got you. So that's
Mhm.
beautiful, beautiful. Because, right. So many people's lives were changed, utilizing our services, doing the things, and working with the experts. They were able to win
Yeah.
at what it is that we're sharing with you all. And so the next thing that I wanted to do, I know before I want to do a recap on utilizing the services. So before you had done your W-2, you had started on your credit repair, right?
Uh-huh. Yes.
And then you moved and you were working on your private reserve accounts where you're becoming your own bank, and you were working on your DCFA account, which is becoming your own bank as well, correct?
Correct.
All right, great. So
Mhm.
you've added to that scenario now. Now you got the you doing lowering your bills, so you're getting all your bills lowered now, correct?
I, I step one step further. I've actually took not only lowering my bills, I've actually accomplished one so far. I'm still working on that, but I was able to reduce my cell phone bill $30 a month. Now,
Out,
if you calculate
outstanding.
that, that's $360 a year. So every little bit counts.
Every little bit counts to go
Yes.
towards your bank.
Yeah,
So,
absolutely.
so you did that. You did the, and you also are looking at the housing now, correct?
I
So you're
am.
able to get the house with no credit check and all of that. You're in the middle of that process.
I
So,
am waiting for the
but
experts.
but there was an update, and the update was you were going into you were working on your diversified cash flow account, becoming your own bank. But now, if I'm not mistaken, you have become your own bank. Is that correct?
Absolutely. So I just successfully paid off. Well, I opened up my diversified cash flow account. I
Hmm.
took 7,900 and some odd dollars of credit card debt that I've paid. So I've literally saved around
So you've
2,000.
eliminated your credit card debt is gone.
Yes. Now I'm
Outstanding.
paying myself
How,
back. It's going to take a year and 11 months. So I took off 4 years and 9 months of
hmm.
debt that would have been paid. I would have paid over $2,043 in interest that I've
Hmm.
actually saved. And
Hmm.
that amount, instead of 4 months, 4 years, excuse me, and 9 months, I will have paid it back myself in a year and 11 months.
Outstanding. So what's going to happen? So to break that down very simply, what you're saying is that you opened up your own bank, right? You
Yes.
then borrowed from yourself at the interest rate you chose that you wanted to borrow from yourself. You then
Yes.
paid off your all your credit card loans, right? And
Yes.
now you're paying yourself back. When you pay yourself back, instead of ending up in a deficit, you will now end up in a profit. Is that correct?
Absolutely.
So, in other
Absolutely.
words, you got paid basically for paying your bills. In other words,
Absolutely.
most people make money. I mean, most people, when they pay their bills, they go broke because they pay their bills. You're actually going to end up with a profit for paying your bills. And I want people to
Absolutely.
understand this is how the wealthy think. The wealthy make money when they pay their bills. The average person goes broke or in a deficit when they pay their bills because there's two universes when it comes to money. And inside these two universes, when it comes to money, there's one universe designed for those that are in the public sector or don't know, and there's the world created for those that are in the private sector, right? The ones in the private sector, they create rules, right? And if you're not aware of these rules, but they create rules, so no matter whether they're spending money or whether they're saving money, they win. And
Yes.
so what we have done, what we've been blessed with, is an opportunity to be able to go in and be able to learn these rules, apply these rules. And actually, we have experts that are going to apply them for you, but you're going to learn the rules. The experts are going to apply the rules because they already know how to do it, and you end up on top winning. So I just wanted to make that clear. That's outstanding. So now you're on a win-win trajectory. You're going to have generational wealth because the DFCA accounts and the PRA accounts, you're going to be able to win and be able to now have you're already set up. In other words, this is, and it's so exciting to me, so excuse me, but you're
Me too.
already set up to leave generational wealth for your generations for the rest of your life. How long did it take you to set this up?
I started, I think, the latter part of May.
So we're looking at what, 1, 2, 3 months?
Yes.
So in 3 months, you change the trajectory of the future of your entire lineage in three
Yes.
months.
Yes,
This
sir.
is extremely powerful. People don't understand. They really don't understand how powerful this is. But you just change the trajectory of the lineage of your lineages or your lineage for
Yes.
the rest of their life, for like
Yes.
10 generations deep. And you've done that
Yes.
within 3 months' time.
Yes, sir.
And that's just touching the tip of the eye.
I've only tipped it.
You haven't even just talk about the meeting we had with Ike. What did Ike say? Ike said something so powerful, it was ridiculous.
You know what? He said so many things. I think one
No,
of
I
the
want to.
things,
This is what I want you to talk about. Let me just be all the way clear.
okay.
When he said they don't, they're just telling us little stuff right now. We don't. There's so much more, right,
Yeah.
that he has to offer. So, do you
Yes.
remember that conversation
Yes. I've only tapped in a portion of the benefits that I've just created.
on the
Only a
DFC
portion.
account only? We ain't even talking about
Only.
all the other components. We're talking
Correct.
about just the DCFA account.
Yes.
There's hundreds of more components just inside of that that's going to make her so much more money.
Yes.
But they said they don't want to confuse us, so they didn't teach us
Right.
that in the beginning, right?
Right. And my head can't wrap around all of it anyway right now.
Yeah.
Uh, but I'm really excited about what I have done, what I've accomplished in a short time, and I'm not expecting this is not going to happen overnight. It's a process. I have to be committed, and I'm committed. I have to be disciplined. It is requiring that as well. And so, but I'm here for the journey, and the journey is I'm gonna reap the rewards and the benefits, and I'm so excited about that.
And the discipline is basically following exactly what they told you to do, correct?
Absolutely,
And that's it.
absolutely.
It's not
Mhm.
hard. It's just a different mindset
Yeah,
because we've been walking in the public sector all of our lives. And don't feel strange. 99% of people on the planet do. Only
yeah,
1%, the wealthy 1%, even know these rules. And the other thing is the reason being is what it